Welcome everybody to the Texas MFM virtual live meeting. So for those of you that have never participated before, right, way back in COVID days, I guess that was like 17 months ago, right? We all decided to go virtual, right? Whether by necessity or requirement. For those that don't know, right, Ben and I run the Houston meetup. We have our partners that run the Dallas MFM chapters as well. And we basically decided, you know what, let's combine forces and do one high quality virtual meetup monthly, right? And kind of really do them across both brands. And so we did that. And I guess we've had probably 15 of these or so. And so with that said, you know, obviously we try to bring in really high value speakers, one of which is coming on today. I'll introduce her a little bit later. And, you know, we're excited to have you all, right? I know people are starting to get zoomed out, but glad to see the people that did stick around and still participating, right? And basically for those who have never participated, we will do about a 30 to 45 minute presentation and Q&A. And then we will do a round of breakout rooms, right? Networking and multifamily is all about networking. It's about who you know and really building relationships, right? I met my partner, Ben, at a meetup, and, you know, that turned into kind of the company that we have today. And so really we'll do breakout rooms where we'll break out the audience into smaller groups of 5 to 7 people, right? And, you know, for 10 minutes, right? Get to know somebody, share an idea, and, you know, that turns into relationships, partnerships, and other possibilities. And so that's the agenda for today. So with that said, I'm Ferris. I have a company called Disrupt Equity with my partner, Ben, and we buy properties throughout Texas and Georgia. We also are vertically integrated. We have our own management company and a couple of other auxiliary businesses, and we love multifamily, and we're based in Houston, Texas. So with that said, I will let Ben introduce himself and see if he's got anything else to add.
All right.
The fact that I'm the more handsome half. So.
Oh, ouch. Well, you did such a great job, man. I don't know what else I can add to that. You know, other than, you know, we're looking for our next opportunity. Networking works. You know, people think that me and Ferris put on a lot of these events to find passive investors. Trust me, we don't need to do the events to have passive investors. We have plenty of that already happening. So we do this to find potential partners, right? People that we want to partner up with and do deals. So take advantage of the breakouts, folks. Learn what Haley has to say. I mean, we have a ton of Quest IRA investors that come into our deals, and understanding that process is going to be a value add. When you know how to talk the talk with your investors and can kind of shepherd them through that process, I think it's going to be a value add. So excited to hear what she has to say, and I'll pass it on to Mr. Anton Matley.
Hi, everyone. Thanks, Ben. Thanks, Ferris. Anton Matley, co-founder and CEO of Peak Financing. We arrange financing for commercial real estate. A big chunk of that is multifamily. And for multifamily, a lot of our clients are syndicators. So we are very comfortable in that space. We do it in most states across the country. And we are glad that we are able to help Disrupt Equity and many others with their financing. I'm also a co-host together with John and Ronnie of the MFM meetup in Dallas. And hopefully we will have soon a live event again. We started out with some great live events. We had, I think, more than 70 or 80 people at every one of them. And then COVID hit. So we pretty sure that both John and Ronnie are agreeing with me that we are looking forward to host some of these in the near future again. Who wants to go next, John or Ronnie?
I'll go ahead.
There you go.
So this is John Montero. I'm based up here in Frisco, just north of Dallas. Lived here for 12 years, do multifamily investing and deal sponsoring full-time in Texas only. My focus is primarily DFW, San Antonio, Austin, and Houston. We do both buy and hold value add product, A and B class assets, as well as new construction. We're actually doing a project with Ben and Ferris down in Katy, Texas, just west of Houston. So we're excited about that project. And as Ben mentioned, always looking for great partners and great projects, and look forward to hearing Haley tonight and learning more about investing with your IRA. I'll hand it over to Ronnie.
Hey everyone, thanks for joining. My name is Ronnie Phillip. I'm with the Kingly Group. We're a real estate private equity firm. based in Dallas, Texas. We focus on Class A and B multifamily across the Sun Belt region. We've bought 572 units in the past couple of years, and we're really focused on Class A, Class B, and new construction. So excited to hear what Haley has to say. Not many people know about investing with the IRA, so I'll kick it out over to Ferris for an introduction. Thanks.
All right. So with that said, clearly Haley's pretty popular. Came highly recommended. So, for those that are new, right? I mean, obviously what we do is we raise equity with our investors, we buy properties and we operate them. And, I can easily say the most popular self-directed IRA product across all of our investors is Quest IRA. And, for us as operators, the easiest one to work with. And so, with that said, obviously investing with your self-directed IRA is actually a really important part of what we do, right? And accepting those kinds of investments from our investors as well as for our investors, right? It's a way to grow your IRA in a way that's not the stock market. And, with that said, Haley obviously represents Quest IRA. I'll let her introduce herself. She does a great job. She was an MC at a conference for us. And so, she'll let her take the stage and kind of walk through more of really what can be done, what can't be done, right? And obviously we like to do 15-minute Q&A towards the end. And so if you guys have questions, I can moderate that for Haley. And with that said, let's go ahead and kick it off. So Haley, go ahead and take the floor. Thank you for coming on board.
Awesome, guys. Yeah, thanks for having me here tonight. I'm excited to be here. So my presentation will be about 30 minutes tonight. I will let you guys know it's really hard to keep this information to 30 minutes because we could go on about IRAs for a pretty long time, but I am going to just kind of let you guys know who we are at Quest, why self-directed IRAs can be beneficial to you guys. And I'll kind of take two different sides to it, because with self-directed IRAs, you can either be investing your own IRA passively into deals, into other sorts of non-traditional assets in the real estate field, or where the magic really comes in is if you guys are out there and you're raising private capital for your multifamily deals, having at least a basic understanding of how self-directed IRAs work can be really beneficial to you guys. And then basically, once you know those kind of basics and foundations of how this process works, all you have to do at that point is have a good relationship with a custodian like Quest. And we have several IRA specialists that we enjoy building relationships with you guys. So have a good idea of the base knowledge of how it works, but then just know when to bring in Quest to the conversation. So quick little background about me. My name's Haley Gant. I'm based out of Houston, Texas. I've grown up in Houston pretty much my entire life. And I've been in real estate pretty much since I was in kindergarten. My parents are investors. They quit their corporate jobs in '99, bought into a home investors franchise. They're also hard money lenders. And I'm an only child, so I had no choice but to grow up surrounded by everything real estate. And fresh out of college, I started working for Quest. And that has now been over 5 years ago. In that time, I worked in Houston. I oversaw the expansion of our Dallas office. And for about almost the last 2 years, I've been back in Houston. And now I do a lot of our education, business development. I oversee a pretty good chunk of our marketing team. So without further ado, that's a little bit of background about me. And I'll go ahead and share my screen. You guys can just bear with me for one moment. All right. Perfect. So hopefully you guys can see that okay. We'll go ahead and get started. So tonight's presentation is called Fundamentals of Wealth Building with Self-Directed IRAs. And again, I'm really going to cover kind of both sides of the scenario where you can apply this if you're looking to invest with your own IRA, your own retirement account, or again, if you're looking to raise private capital for your deals, some of the things that you should be aware of as you're working with your potential investors, and some of the things that you should keep in mind to help these deals go smoothly as well. So real quick, I won't spend too much time on this. Quick little background about Quest. We've been around since 2003. We have about 20,000 clients nationwide. Physically, our offices are in Texas. Our headquarters are based out of Houston, and we do have remote offices in both Dallas and Austin. And in all of our Texas offices, we actually have really big classrooms and education centers where we host events, we host lunch and learns and mixers, because we really enjoy not just teaching investors about all these fun IRA things and how they work, but also really being a nice place where investors can come together, you can network, you can meet other people, because we realize in this business, it is so important not just to understand the information, but to be able to build a strong network and meet other reputable people that you can work with as well. So physically we're in Texas, but we do operate in all 50 states. We've got clients all across the US. And every day when we close our doors, we have about $400 million in undirected cash. Now, the reason why I like to touch on that is because Quest is just one of a handful of self-directed IRA custodians. Self-directed IRAs are only 2% of all retirement money in America. So there are literally trillions of dollars in American 401ks, in IRAs. And to be completely honest, most people out there are not happy with where their money is invested. They only think that they can invest their IRAs into publicly traded assets like securities, the stock market, mutual funds. But you guys as real estate investors and as people that are going out there looking to raise private capital for your deals, there is a huge opportunity here to tap into other people's IRAs as private capital sources for your deals. But to be completely honest, most people just have no idea that you can do this because there's not a lot of companies out there that do the type of education that we do at Quest. So as you guys are going out there, start working this into your conversations and just always know that you can turn to Quest if you have more questions or if you need us to come in and just kind of help to fill in the gaps of the logistics of how this process works. Now, to wrap up this slide, obviously, there's got to be a disclaimer at the beginning of almost every presentation that you see in real estate. At Quest, we do not give tax, legal, or investment advice. Our role is to fund investments based off of our clients' direction. So it's really important that our clients make sure that they do their own due diligence. In all of our classes, we really, really stress do not rush into deals with people that you do not know. Kind of goes without saying, but you've got to say it. Guys, make sure you're taking the time to vet your deals, look at the documents, vet the people that you're working with. But if you come to the right groups like this, build the network before you get into the deals, you have a much better chance of success versus doing it alone and rushing into deals with people that you might not know too well. So moving right along, what is a self-directed IRA? To be completely honest, the IRAs that we hold at Quest legally are exactly the same as any IRA that you have at any other custodian. The only difference is the types of assets that your custodian allows you to invest in. So most of your traditional custodians out there like Fidelity, E-Trade, Charles Schwab, TD America, all of these kind of normal custodians, their platforms are only set up to allow you to hold publicly traded assets. Typically at those more traditional custodians, you've got a financial advisor. They sell investments for your IRA to be invested in. A lot of times they might make a commission off of these investments. So, and if you walk into Fidelity and you're like, hey, Fidelity, I want to buy real estate with my IRA, they're probably going to tell you one of a few things. One, it's illegal. You cannot do that. They just don't operate in the world that we live in here at Quest. Or they're going to tell you, you really can't do that. You have to take a distribution. It's going to be taxed. It's going to be penalized. So a lot of times, if you guys are out there and you're bringing up this idea of, hey, you could use your IRA to fund into my apartment or my multifamily deal, don't be surprised if that person goes back and they talk to their financial advisor and then they freak out because they think, wow, I really can't do this. I actually have to take the money out of my IRA to do this investment. And that's really not the case. To be completely honest, a lot of our clients, typically how it will work is they will open up an IRA at Quest. They'll typically open up the same type of IRA that they might currently have at Fidelity or one of those more traditional custodians. And you can just transfer some of your IRA funds over to your IRA at Quest. And it allows you to really kind of diversify that retirement portfolio by not having all of your eggs in one basket. So a lot of our clients, to be completely honest, have IRAs at both types of custodians. They might just transfer their cash back and forth based on where they're wanting to invest it at any particular time. So Self-directed is really just a marketing term. It's not a specific type of IRA that you have to like move your funds into. What it really comes down to is what types of assets does your custodian hold? Because at Quest, we don't hold any publicly traded assets. We specialize in holding real estate, notes, private placements, and our clients are actually holding these investments in their IRA. They're not like taking the money out to do the investment and then putting the money back in. It would be very similar to, say, if you held Apple stock in your Fidelity account, except in this case, you're just holding a piece of real estate, or maybe your IRA owns shares in an LLC, a passive apartment complex. You guys kind of get the idea there. So as you can see, there's a lot of benefits to doing this. You guys, because I assume a lot of you out there are probably at some point looking to raise private capital for these syndications. Understand that most people out there are not happy with the returns they're getting in their retirement account. They do not have faith in the stock market. A lot of people with these up and down swings, they've been burned one too many times by the stock market. And especially as people start to get a little bit older in life, they're getting closer to retirement. People really want to find safe and secure places to invest their money. And even if they just start out by doing one deal with you, they can transfer their funds back and forth at any time. And a lot of times what we'll see people do is maybe start out with one investment. If it goes well, we'll see them transfer more funds over and then kind of grow the account from there once they maybe get a couple of deals under their belt. So moving right along, we actually have 7 different types of accounts that can be self-directed at Quest. Now, this is where I have to be really careful on my time, because in some of our longer presentations, we can spend 30 minutes alone just on the types of accounts. But I'm not going to do that tonight. I do have a couple of main points that I want to get across with this slide here. The first point here is that most Americans, most families don't just have one IRA. More realistically, what we see a lot of the times is maybe the husband has a traditional IRA. Maybe he left his job and he's already rolled over his 401k. Maybe the wife has a small Roth IRA that she started years ago, but hasn't really done much with, so it's pretty small. And maybe through their current employer, maybe they have a health savings account, or maybe they have other 401k accounts. So since I'm not going to spend 30 minutes on this slide here tonight, I do want to let you guys know that really, to get the full scope of how these accounts apply to both you and your immediate family, it's really important to set up a free consultation with one of our IRA specialists. Our IRA specialists are actually trained to walk through certain questions through these consultations to find out kind of overall your whole picture, what you have going on, what types of accounts you might have, and questions like, are you self-employed? Your 401k with your previous employer? Is it with your current employer? Because that really affects how the money might be able to move around. And for individuals out there that are either looking to really maximize as many types of accounts as they can, or we might see a lot of people that they might not really be starting with that much. So they're like, okay, what accounts can I open? What accounts can I make contributions to? And how much can I dump into all of these accounts within 1 year? That's where the consultation with an IRA specialist really, really comes into play and can really be a game changer. Because honestly, if I went that deep into all of this in this presentation tonight, you're probably not going to remember all of it. I don't want you guys to just start zoning me out as I get into all of these technicalities. But I do want to go through just a couple of the accounts here. The first one is the personal plans. This is where most of Americans hold their wealth, is in some sort of tax deferred retirement account. Tax deferred meaning whenever you typically have a 401k with your employer and you make contributions, and especially when your employer is matching those contributions, typically there's some sort of tax deduction up front whenever you put that money in. So you make a contribution, it's typically tax deductible. So everything that grows from there, as that account grows over your lifetime, it's not going to be taxed while it's growing. But once you go to take out those distributions later in retirement, since technically none of that money has been taxed yet, you pay the taxes on the distributions once you take them out at retirement. the original thinking behind that was when you're in your working years, you put money in, you can get tax deductions. And then when you're retired and you're no longer working, that's when you pay the taxes on the money as you take it out for personal use. But the problem with this is say you take your 401k through your employer, or once you quit that job and you roll over that account to a traditional IRA, say you grow that account to $1 million. All of that $1 million is not actually yours because you haven't paid taxes on it yet. Now, and this is probably the deepest I'm going to get in this presentation here. This is why I really like to talk to real estate investors about the opportunity to do what's called a Roth conversion, because basically the complete opposite of the traditional IRA, the Roth IRA grows completely tax-free. Whenever you put money into a Roth IRA, you don't get any tax deduction. Or what you can do is you can actually take funds from a tax-deferred traditional IRA and convert those to a Roth IRA, which now grows completely tax-free. Now, what happens when you do this, though? You have to pay taxes on whatever amount you move into the Roth IRA. But as you guys are going out there and you have this knowledge about real estate and you have this potential to really exponentially grow these accounts by the time you hit retirement, I firmly believe that every person out there should have a Roth IRA and should be considering, should I maybe start converting pieces of my traditional IRA into a Roth IRA? You don't have to convert the full amount, maybe just small amounts each year. But say if I take $10,000 and I convert that to a Roth IRA this year, I'm going to pay taxes on that $10,000 when I pay my taxes for the year. But then if I take my Roth IRA and I grow that account to $1 million by the time I hit retirement, all of that money is actually mine. I don't have to pay any taxes on it once I go to take my distributions out later at retirement. And that's the reason why I like to go that in depth on that topic. Guys, everyone out there, if you don't have a Roth IRA, get one open up. If you make too much money to make a contribution to a Roth IRA, just convert pieces at a time each year. And if you have more questions about that, we can talk more about it in the Q&A, but everyone out there should have a Roth IRA. And moving right along, I'll keep these other quick. If you guys are self-employed, or if you're talking to potential investors that are self-employed, these employer plans here in the middle allow for much larger contribution limits. These are great for individuals that are looking to dump a lot of money into an IRA within 1 year. And a lot of times these employer plan contributions are also tax deductible. So for example, the SEP IRA, depending on your income, you may be able to put up to $58,000 from your own money into that IRA and take a tax deduction on that contribution. So if you guys are self-employed, if you're looking for a way to minimize your taxes for the year, talk to your CPA, see if maybe a SEP IRA or maybe a solo 401k might be best for you. Now, if you are self-employed with no W-2 employees and you are using your retirement account to passively invest into multifamily deals, there's a fun little tax that sometimes might apply. It's called UBIT, or unrelated business income tax. If you guys are familiar with IRAs, you know what I'm talking about. If you don't know what UBIT is, I'm not going to go that much into detail because I don't have time to do that tonight. But if you guys are using your IRA to passively invest into multifamily deals and those investments are generating UBIT, talk to your CPA, see if you qualify for a solo 401k, because the solo 401k, it's a bit more complex than our other just IRAs that we hold at Quest, but it has a lot of advantages. You actually get the checkbook with this account, and you just flat out get an exemption on UBIT if you are passively investing into multifamily deals or real estate that is debt leveraged. So if you're self-employed, talk to us later. You've got a lot of cool opportunities there. And last but not least, the health savings account and the education savings account. These are great. They can be self-directed just like all of our other IRAs at Quest, but you can actually use the money today completely tax-free to pay for any of your qualified health expenses for you and possibly your direct family members as well. Or if you have children that have educational expenses anywhere from kindergarten up until age 30, you can pay for those tax-free from a Coverdell education savings account that can be self-directed into real estate, just like all of our other IRAs. So gonna leave it at that for this slide here, but to kind of recap on those main points, most Americans don't just have one account, they might have several. Set up a consultation with us and we can really walk you through the ins and outs of how these accounts apply to your personal situation. And if you take anything away from this presentation tonight, get a Roth IRA opened up this year, put money into it, do a conversion. If you're not eligible to make a contribution, everyone out there can have a Roth IRA. It just might depend how you need to get that account funded. So moving right along, these are the different investment options that you have with your IRA at Quest. We do break it down into 3 different investment categories. Real estate would be like the direct ownership of single family real estate, maybe rental properties with the IRA. Private entities is a great passive option. This is where we see a lot of multifamily investments, passive investments into commercial deals, startup companies, pretty much any sort of privately held company. And last but not least is promissory notes. We fund anywhere between 400 to 600 transactions each month. And about half of the transactions that we fund are some sort of promissory note. A lot of our clients like to use their IRAs to passively invest into other people's deals. Because when you're investing with your IRA, there are definitely some rules that you need to be aware of. I don't have a slide for it. I took it out because that slide also makes me go over on time. So I'm not going to go that far into it tonight. But just be aware that if you're syndicating a deal, you cannot use your IRA to invest into your own deal that you are the managing member of. You can't use your IRA to invest into your own business or basically do any sort of investment that directly benefits you right now. Our IRAs get really awesome tax advantages to help us save for retirement. Therefore, the IRS wants you doing investments with your IRA that are arm's length, that don't directly benefit you today. But the nice thing is, here at Quest, we're always happy to help answer those questions for you guys. If you ever have a scenario where you're like, hey, I don't know if this might be allowed or not, just give us a call, reach out to your IRA specialist, and we can walk you through if it's prohibited, if it's allowed, or maybe if it's a gray area and might depend a little bit on your risk tolerance, maybe need to consult some further legal counsel there. But it is 100% up to our clients where they want to invest their IRAs. At Quest, we do not provide investments. We provide a lot of education, but we can't tell our clients where to invest their accounts. So that's why we love networking and really getting in with groups like you guys, because you already have the network, you have people that you can talk to. And then whenever you find deals among the want to use your IRA for that, that's when Quest comes into the picture. We can help facilitate the process. We'll help you get the account open. We'll help you get the account funded. And then we'll connect you with our transactions team that will then walk you through the investment process at that point. And what do you know? That's actually all of the information that I have on my next slide here. So one thing that I like to talk about on this slide is the timeframes. At Quest, our timeframes are very fast. It's always going to be 24 to 48 hours from the time that we have the signed documents that we need. Now, where the time frame gets a little unpredictable is this step number 2 right here. Opening up the account really fast, 24 to 48 hours. But you guys really need to be aware of the time frame of how long it actually takes other custodians to transfer or roll over those funds into Quest, because that process can take anywhere from 3 to 5 business days to 3 to 5 weeks, just depending on where the funds are coming from. So whether you are looking to invest with your own IRA and you've got an investment deadline coming up, you need to get the ball rolling on that process. Or if you guys are out there and you're raising capital for an upcoming deal that has a deadline, don't wait until the week before that capital needs to be in your bank account, because if the money isn't at Quest, it might take a couple of weeks for us to actually get those funds before we can fund them into your investment. So I always like to tell people, if you are actively looking to do an investment with your IRA within about the next 3 to 6 months, go ahead and get the account open, get it at least partially funded, and be aware of the time frame that it takes your current custodian to actually send your funds over to Quest once you've initiated that movement of funds. And especially for you guys that are raising capital for your deals, a lot of times when you talk to a potential investor, they're probably not going to fill out the forms that day. They might need to review it with their spouse. They might need to review it with, hopefully their attorney or someone like that. So you want to make sure, as you're working with other people's IRA money, that you're building in some buffer into that time frame to allow some time for us to get the documents. If we're missing something, we can get the correct information. We can make sure the IRA has been titled correctly. And you don't want to overly stress yourself out by really cutting that time frame short. So just make sure you give yourself enough time, definitely a couple of weeks, for that transfer or rollover to happen. And from there, it's a pretty smooth process. Again, our time frames are very fast. All right, I think I'm doing all right on time. So as you're self-directing your IRA, it's important to know the basics. Now, these next few slides, this is where I kind of focus in on things that I've learned over my last 5 years at Quest that I think are important, that whether you're using your own IRA or you're raising funds from other people's accounts, these are some important things that you definitely want to keep in mind. First and foremost, what are the types of accounts that can be self-directed? Because if you're talking to people and they start saying, well, I have a Roth, I have a traditional IRA, I have this, you want to kind of have at least a basic understanding of what they're talking about. That way you can kind of guide them through the conversation. Also, this second bullet point here is extremely important, especially if you are raising capital from other people's accounts. When someone calls into Quest and they say, hey, Quest, I have a 401k, I want to roll it over, I want to invest into real estate, the very first question that always comes out of our mouth is this 401k with a previous employer or is it with a current employer? Because if their 401k is with a current employer, there's a good chance that they are not eligible to move those funds until they leave that job. Now, if the 401k or the 403b, any like 3 numbers and a letter, those types of plans, if it's from a previous employer, 99% of the time, those funds can be rolled over very easily. It might take a couple of weeks, but they are eligible to be moved. But what you don't want to do is get to the very end of an hour-long conversation with someone and then realize that none of this can actually happen because they are nowhere near quitting their job and all of their funds are locked up there. So that's really important. Is the 401k even eligible to be rolled over? Also, what is the time frame? I already kind of stressed this on the slide before this, but make sure you give yourself enough time. If the deal needs to be funded Friday, don't call us on Monday and expect it to be able to get done in time, because just logistically, an IRA with us has to be open for 7 days. There's a 7-day rescission period. The client needs time to review the documents. We have to wait for the funds to arrive. So just make sure to kind of keep that in mind. And also be aware that Quest also needs all of the investment documents showing the IRA taking title to this investment. It's funny, every once in a while, I'll get an email from someone and they'll be like, hey, Haley, I'm ready to fund my IRA into this deal. Please wire $50,000 to this bank account. And I'm like, no, that's not how it works. We need the investment documents. It has to show your IRA taking title to this investment. You as the client have to sign off on those documents. And we call that your read and approved signature. That lets us know that you as the client hopefully have read and approved those investment documents for your IRA. Those are things that we absolutely have to have before we can fund that deal. And what will the IRA custodian need? It's kind of basically exactly what I just mentioned there, but I like to include it just to double stress how important it is that we get that information before we can fund that deal. And last but not least, to kind of sum it all up, how to successfully invest with either your self-directed IRA or other people's IRAs. First and foremost, build a network. Surround yourself with other like-minded people. You're going to have a much better chance at being successful in real estate if you surround yourself with the right people. If you try to do it by yourself, your just chances of success aren't going to be as high as if you're with a solid network. You've got people around you that have been doing this. You've vetted them. They've done deals like this before, and you're going to have a much better chance of being successful and even finding the deals in the first place. Once you've built a network, know how to introduce the conversation. You know, unless you're in my shoes, you probably don't talk about people's retirement accounts every day, but start learning how to work it into your conversations, because it might feel weird at first, but as you start to kind of introduce this topic to conversations, you will realize how many people out there would absolutely love the opportunity to invest their IRA into a secure and safe real estate deal. Now, obviously, every real estate investment does come with risks. Some deals are more secure than others, just the way that they're structured. But learn how to introduce the topic of conversation. Hey, I've got a deal. You know, do you know anyone who might be interested in investing? Did you know that you could use your IRA to passively invest? And a lot of times once you mention, oh, you can use your IRA to invest in this deal, they're either going to say, that's interesting, or they're going to look at you like you're crazy because they've never heard that you can do this before. And that is exactly when you bring Quest into the conversation. And this is really helpful for a few reasons. One, this is our job. This is what we are trained to do. Your job is to go out there, build the network, and find the people to invest into your deals. Our job is to explain how this whole self-directed IRA process works. We are also a neutral party in these transactions. We are never here to push your investment on someone, convince them that they need to invest with you. We're neutral. We're here to explain how it works, the logistics of the process. And at the end of the day, if that person decides that they want to invest with you, great. We'll get the account open. We'll help them get it funded. We'll teach them how it works along the way. And if not, if they need a little bit more time, just go out there, keep having the conversations, because eventually you will find someone that this is a really great fit for maybe how they would like to diversify the funds that they just have sitting around, probably not doing much. Also, once you bring us into the conversation, keep the lines of communication open. This is really important when you're working with our transactions team to get your deals funded. I can't tell you how many times we maybe get an email with incomplete investment documents. They didn't even send in everything that they needed. And then that person stops checking their email for like 6 days. And then they call Quest and they're like, hey, Quest, why didn't my deal get funded? Make sure that you are doing what you need to on your end to see this through to the finish line. You know, Quest, we are regulated by the Texas Banking Department. We have to have certain things in order to be able to fund these investments. And if we're missing something, we just absolutely cannot fund it until we have that missing information. Also, be aware of annual reporting requirements, especially if you are on the syndicator side, on the management side. Around November to December, you're going to notice all of your investors with their IRAs are going to start reaching out to you. And they're like, hey, Quest is telling me that they need a fair market valuation. Every year, as a custodian, this is something that we have to report to the IRS. As a deal syndicator, literally all you have to do is send us a spreadsheet of all of your IRA investors, the corresponding value of their IRA's investment, and we can use that as the supporting documentation for all of your investors. And you only have to do that once a year. But just be aware that is going to come up, and they are due sometime like January 15th, around there. Also, it goes without saying, but have integrity. Word spreads fast in this business. You guys are working with people's retirement money that they have probably worked for a really long time to save up. So make sure that you're keeping their best interest in mind. You know, obviously, if you're working with a reputable investor, this is something that should be on the forefront anyways when you're doing that initial vetting process. But keep in mind that, you know, people have worked really hard to save up this retirement money. And especially if it's their first time doing this type of deal, you want to make sure that you make them feel comfortable along the way. Because if they have a good experience with you, and once you pay that final payment back to their IRA, they're probably going to come back to you and say, that was awesome. When's your next deal? Let's do this again. So those are the things that I found that just overall, to sum it up in one slide, to make your deals go smoothly and how to successfully get through this process for either your IRA or your investors as well. So to kind of wrap it up, guys, we provide a lot of education. I loved the little endorsement by you guys here in the beginning. At Quest, we're really passionate about being the best self-directed IRA custodian out there. A lot of us are investors ourselves, so we understand how investors think. We understand how this process works. And our principals of our company, Nathan, Quincy, our executives, almost all of us invest into real estate ourselves. So that's why we want to make this such a smooth and easy process on you guys, because you can't send documents in and wait 4 weeks for the deal to be funded. It just does not work like that. So reach out to us if you have more questions. We host a lot of our own events, a lot of webinars. We're slowly bringing back the in-person events, depending on how the next month goes here. But we also host our own virtual networking happy hour twice a month. It's kind of a similar setup to this. Everyone gets a chance to introduce themselves. There's no presentation. It's strictly networking. And I run that event myself on the first and third Wednesday of every month. We also have a promotion going on, guys. If you're looking to get started, or if you're a current client and you've got a deal, another deal coming up, reach out to us. We'll make sure you get your credits. We're giving away up to $500 in account credits if you fund your account before the end of this quarter. So not to make it like a sales pitch or anything, but we do have an awesome promotion. I really like that one. And we also have a referral program as well. So if you guys have had good experiences with us, if you know other people that could benefit from having an IRA, send them our way. Make sure they put your name on their application, and we'll give you guys some credits to your accounts. That's all I've got. This is my contact information. Guys, do me a favor. If you're interested in scheduling a consultation with us, whip out your phone, scan the QR code. It goes directly to our Calendly. We'll reach out to you tomorrow. We'll get something scheduled, and I hope this was helpful. I know a lot of you guys might be a little familiar with self-directed IRAs, but I hope maybe you learned a little something new. And if you don't do anything, please get a Roth IRA open and get some money in there. It's such great tax-free wealth there. And I hope that was helpful. That's all I got.
All right. Great job, Haley.
Yeah,
All right.
thank you very much. All right. So if people have questions, comments, I know a lot came in, go ahead and ask them and I will moderate them. And so let's go ahead and kind of keep going.
I'm going to be selfish and I'm going to ask a question because you touched on something that, because I'm on more of the asset management side of our business. I deal with your team quite a bit, especially around January timeframe. You mentioned just sending in a spreadsheet. I know that there seems to be some discrepancy as to what exactly the amount of information the syndicator needs to provide versus the client needs to provide. Mm-hmm. And they tend to put more than just a data point on a spreadsheet on us having to fill out the full fair market value form. Are you saying that we don't need to do that?
No. So on the client end, we do have the old kind of traditional fair market valuation form that the actual investment manager would have to sign. But what we're really, really pushing for the last, I think, 2 years now is for our clients to upload their fair market values directly to the client portal. They don't have to fill out a form anymore. That's something I meant to mention in my presentation, but 30 minutes, you can only say so much. We have a really great online client portal where you can actually upload all of your investment information. You can upload all of your fair market values directly through there. And they could attach that spreadsheet or an email, something just really basic that basically comes from the investment manager saying, this is the value of this IRA account's investment into this deal.
And so you don't need to value the asset as a whole, right? You're just needing to value what their actual investment amount is worth at that point, right?
Correct. Mm-hmm.
All right. And for folks, I have heard, and Haley, you can correct me, I think it does need to be done by January 15th, correct?
January 15th, yeah.
Sounds about right.
Mm-hmm.
So, but I see people coming out of the woodwork sometime way past that. So just you have to get on top of that.
Oh my gosh, my dad is literally on the delinquent list every single year. I'm like, Eddie, submit your fair market value. Come on, you know this. It's been a client since 2005.
So one other, and I'm selfishly taking the mic here, but I'm going to ask another question because you touched on it a little bit, it's been a little bit of a hot button topic the last couple of years, UBIT. Give us the 1 minute rundown on what it is, how to avoid it, because that seems to have been the, hey, don't do a self-directed IRA because you're going to have UBIT. And so it's kind of been, and I don't know if that's an EQRP sales pitch or whatever it might be, right? But can you kind of give everybody that's kind of listening, that part of it and what that is?
Yes. So basically with IRAs, so typically whenever you do an investment with your IRA, all of that profit goes back into the account and it's not taxed. It's completely tax sheltered. However, there are a few certain types of investments that when you do these with your IRA, it actually triggers a tax within the IRA called UBIT, or unrelated business income tax. This tax is only triggered by certain investments, and it is triggered by if your IRA invests into an ongoing trade or business, which we're not really going to talk about that one here. More commonly, where we would see it in this case, is if the IRA either owns debt leveraged property, so your IRA can actually buy a house and get a loan to leverage those funds, or if your IRA invests into an entity that is owning debt leveraged property. Once the K1 from that investment starts to show a profit of over $1,000, at that point, the income to the IRA will likely incur UBIT, or unrelated business income tax. Now, a lot of people get really afraid by UBIT because, to be honest, IRAs are taxed at trust rates, so they hit the top tax bracket very quickly. But with UBIT, it's only on the proportion that's debt leveraged. So say if that investment is, for example, 50% debt leveraged, once the K1 shows a profit of over $1,000, 50% of the income to the IRA from that deal would be subject to UBIT. And this is where you would need to meet with a CPA who is knowledgeable about IRAs and UBIT and help you file a 990T, which is basically a tax return for an IRA. On the 990T, you can actually use like certain deductions like expenses, potentially depreciation, depending on the type of investment, to minimize the UBIT. And if I'm remembering correctly, you could potentially use previous years where the K1 was not showing a profit to offset. So it is something that you want to be aware of. I wouldn't necessarily say, oh, if this deal incurs UBIT, I shouldn't do it with my IRA. It's just something that you do want to be aware of because it will impact the overall income that ends up coming back into the IRA.
Cool. Love it. Thank you. All right, Ferris.
So I apologize everyone for Ben cutting because he typically does that. But I'm gonna let people ask questions, and I've got a few of these directly to me. So there's some that aren't public, but I will ask them. So one of them is, if we already have self-directed IRA account set up with a custodian company, what is the process to transferring to another custodian like Quest Trust?
Ooh, great question. So it depends. If you're just transferring cash, it's pretty straightforward. Sometimes custodians might make you wait a couple weeks to actually transfer that cash over. But where it gets a bit more complicated is if you have an asset at another self-directed IRA custodian that you want to transfer over to Quest. There is a whole process for that. We actually have an in-kind transfer department that specifically works with our clients that are transferring in assets from our competitors. Now, to be honest, unless you're just having a really bad experience at your current custodian, which is something we do encounter kind of frequently, depending on when this investment is going to pay off, sometimes it might be easier to let that investment kind of go through its life cycle, let it pay off. And then once it's done, just transfer the cash over to Quest. But if you're just really wanting to transfer that asset over, we basically, we have to see a copy of those investment documents. We have to make sure that that asset is administratively feasible for us. We have had some clients before that they're actually getting fired from their current custodian for various reasons. So they're trying to move that asset over to Quest. So that's something we always kind of we try to find out why they're moving that asset up front before we actually accept that we're going to accept that asset. But once we see the documents, we're okay with accepting it. At that point, the client can fill out the transfer form. They'll get the asset re-registered to the Quest titling, and we'll get it moved over to Quest. That process can take anywhere from like 60 to 90 days sometimes. So it really just depends on how like gung-ho you are on wanting to get that asset moved over. Great question.
Next question or big comment, I guess. Big thumbs up to Quest. Have an IRA with them, and their customer service is top notch. They will really walk you through the process. Let's keep going then. Here's one more. Can I transfer my HSA from my current employer?
You can, yes. So HSAs don't really fall under the same rules as 401ks, where a lot of people actually have an HSA set up through their employer. And you can transfer your HSA funds at any time, even if you're still working there. And HSAs are really awesome. And I won't spend too long on this, but basically, if you have an HSA in place and you're paying for your health expenses out of pocket, keep track of any health expenses that you're paying for out of pocket, and you can come back at any point in time in the future and reimburse yourself completely tax-free from your HSA. So if you kind of understand how to work that, say if I have $20,000 in medical expenses this year, I can pay for those myself, and I can kind of build up my HSA in the background. And maybe 5 to 10 years from now, I can take a $20,000 distribution from my HSA completely tax-free and go do whatever I want with it, because technically it's a reimbursement for a prior medical expense. HSAs are really cool. I like them a lot.
All right. Let's keep going. So next one's from John Haley. When investing in a multifamily deal with your IRA, who signs the PPM and subscription documents, the IRA custodian or the IRA holder?
Both. So Quest will sign off on behalf of your IRA once the deal is ready to be funded. But in order for Quest to sign off on those documents, we have to have the client's signature on that same page. And that's basically what we call your read and approved signature. That signals to us that, hey, I, as the client, have read these documents. I approve this to be funded with my IRA. Send those documents to Quest once you've signed off. And at that point, we will sign off and then send the funds wherever they need to go. Good question.
Let's keep going. So next question is there any way to target only self-directed IRA investors? How do you reach out to networking events conducted by other IRA custodians similar to yours for networking with investors?
So we do have a few competitors out there that are also hosting educational events. I think we're the only one that hosts the virtual networking happy hour. And, as far as all of our competitors out there, there's only a handful that I would say host like comparable educational events to ours. But once our events come back in person in Houston, Austin, Dallas, definitely come check those out. We get like 60 people at our weekly lunch and learns. And the virtual happy hours that we host on the first and third Wednesday are a really great place. We get anywhere from like 35 to 50 investors on every virtual happy hour, and it's all across the US. I think, did that answer that question?
Yeah, I think the answer is don't worry about the other guys.
Yeah, just come to Quest. That's all
right. Let's keep going. Last question, and it's perfect because we're about to get on time before we do breakouts, is can you touch on how cost segregation and capital gains upon the sale impact the self-directed IRA?
That is not my area of expertise. So as far as like cost segregation things go, that typically isn't quite as applicable to an IRA, since an IRA is already a tax exempt entity. Now, I know a lot of times, like if you invest your own funds into a multifamily deal, there might be, ways you can get like tax deductions or money back on that. Not my exact area of expertise, but in the IRA, it's already tax exempt. So I'm probably not the best person to ask that question to.
I'll help you out, Haley. So yeah, I mean, I think there's little to no value if you're doing a self-directed IRA from cost segregation. That's typically going to be from people that are investing with cash. Capital gains, right? That's rolling into your IRA. It should be tax exempt, right?
Yeah. There's no benefit to either, really. So
yes. Well, I mean, the benefit of the capital gains is that you're not going to get taxed, right? So there's you're not getting the benefit of the cost segregation, if you're investing through a self-directed IRA, but you're getting the benefit of not getting taxed on your capital gains, which would happen if you're investing with cash. So, it's kind of a, balancing act.
If anyone's capital gains is burning a hole in their pocket, Ben would be happy to take them off your hands.
There's also, if you have that problem, right, just invest in a deal before the end of the year, make sure they're doing cost segregation, you get depreciation from that, right? We have a ton of people in Q4 that always hit us up, hey, what deals are you closing before the end of the year? Because they need to help out with, or they need help with capital gains. So.
And
all right.
Thanks for jumping in on that. I will add one thing to that. For that exact answer right there, we get a lot of people that are like, well, why would I do this deal with my IRA? Because I want the personal tax benefits. That's
You're already getting it. You're already getting it.
Why not do both? It's not one or the other. Keep doing your investments outside of the IRA, but also utilize this money you have in your IRA to do investments that you actually have more control over where your money's invested. So that's always my answer to that, because people are like, well, why would I do this if I can do this? No.
And you move pretty quick on this, but I felt like the one thing that, was a big takeaway for me on this was that, you could have multiple IRAs, right? You can move money back and forth. I think everybody thinks it's like an all or nothing thing, right? And I think, ultimately reaching out to Quest and their specialists and, kind of talking about your unique situation, they can kind of maybe potentially help you structure the right thing, or at least guide you to, hey, you should do this or you should do that. Correct?
Exactly.
Yeah. No, I love it. Love it.
All right. With that said, I think we are at time. So Haley, thank you very much. Really appreciate it. Wealth of information for everybody. I learned a few things that I didn't know, and I've heard, many variations of this. So appreciate you kind of hopping on and walking people through it. And I know, Haley, if you can type in your email address, I know you had it on the slides, but if you could type it in case anyone wants to reach out to you. And with that said, we'll go ahead and do breakouts. And Haley, you're welcome to stay on. You're also welcome to hop off. So hopefully someone.
I got my glass of wine. I'm going to hang out.
Oh,
all
right.
For those that have never hopped on before, right? Breakouts basically we'll break out the audience into groups of about 6-7 people and give you all a chance to network. Maybe someone will get Ben, unfortunately, and maybe someone will get Haley. You don't know, right? So, get someone in the group, and I'll try to split up the leadership as well. And, again, it's all about networking, meeting people, building relationships, right? Some of these relationships turn into something valuable. And so we are big proponents of that. And with that said, all right, if anyone doesn't know what to talk about what you ate for breakfast on Saturday. All right.
Well, that's a horrible topic, man.
I just picked something out of thin air, my friend. So with that said, let's see. I'm going to go ahead and get us broken out. So we will see you guys on the breakouts.
Thanks, Haley.
Thank you.
Thanks, everyone.